Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Thursday, September 22nd. U.S. stocks may continue to tumble today, following steep declines on Wednesday and a broad sell-off around the world. The carnage started late yesterday afternoon after the Federal Reserve announced a $400 billion debt swap program nicknamed Operation Twist. The Fed will sell shorter-term treasuries in favor of longer-dated notes in an effort to further cut borrowing costs. The move was widely expected, but many traders may have been hoping for more aggressive steps to boost the struggling economy. Investors also seemed concerned that there was internal dissension within the central bank over the decision. In addition, the Fed's statement rattled the market as well. It cited significant downside risks to the economic outlook, including strains in global financial markets. Following the announcement, the selling pressure intensified, with financial stocks leading the decline. Bank of America tumbled 7.5%, also hurt by a downgrade of its credit ratings by Standard & Poor's.
Asian stocks picked up where Wall Street left off yesterday. Overnight, Hong Kong's Hang Seng Index plunged nearly 5%, and the other major markets didn't fare much better. Meanwhile, across Europe, the selling pressure may have been even worse. Frankfurt's DAX index, the FTSE 100 in London, and the CAC 40 in Paris are all falling more than 4%. And the euro is falling sharply on continued concerns about contagion from the sovereign debt crisis. Right now, the shared currency is dropping well below $1.35 against the greenback. The strength in the dollar today is really weighing on commodities. Crude oil is dropping about $4 a barrel to right around the $82 mark. Gold is also tumbling, despite its status as a traditional safe haven investment. Right now, it's trading at about $1,760 an ounce, down another $50 today. But Operation Twist does seem to be having the desired effect on U.S. Treasuries. The yield on the benchmark 10-year note is dropping to an all-time low, below 1.8%, while the 2-year bond is holding steady, yielding about 0.2%.
On the corporate front, today's earnings calendar is relatively full, and perhaps the biggest name on the list is FedEx. Its fiscal first quarter earnings rose 22%, and revenue increased by 11%. Both numbers were slightly ahead of estimates, but the shipping giant lowered its forecast for the full fiscal year to reflect higher fuel prices and slowing growth in the global economy. The outlook may weigh on the broader market because FedEx is often seen as a bellwether for the overall economy. However, one stock winner today may be Rite Aid. Its quarterly loss narrowed more than expected as overhead costs declined and same-store sales improved for the third straight quarter. The drugstore chain also boosted its forecast for the full year. Meanwhile, Discover Financial Services is jumping more than 6%, rebounding from yesterday's steep decline ahead of its quarterly report. And after the closing bell, we'll hear from Nike, among others.
On the M&A front, a huge deal that we gave you a heads up on earlier this week is taking a major step forward. Aerospace and defense contractor Goodrich agreed to a $16.5 billion buyout from United Technologies. Including debt, the total enterprise value of the deal is more like $18.4 billion. The price tag of $127.50 a share represents a 47% premium over Goodrich's trading level, prior to speculation about the deal. Shares of Goodrich are jumping more than 10% on the news, while UTX is set to open about 5% lower. And finally, keep an eye on shares of Mosaic today. Standard & Poor's announced that the fertilizer maker will join the S&P 500 index at the end of trading on Friday. It will replace National Semiconductor, which is being bought by Texas Instruments. That's the latest from Weiss Research. We'll be back after the opening bell with a reaction to all the day's market-moving news, including the weekly reading of initial jobless claims.